Welcome to This Explainer. Okay, today we are diving into something that literally nobody wants to deal with, but absolutely has to. Taxes. We're breaking down 10 incredibly common tax pitfalls, guaranteed to drain your wallet in 2026. Whether you're a standard employee, an avid investor, or running your own small business, the tax code is just full of these hidden traps. But don't worry, we're going to map out exactly how you can bypass them. Look, let's bust a major myth right out of the gate. When people get those scary IRS letters in the mail, it's rarely because they're trying to pull off some massive fraud. A massive, unexpected tax bill is almost always the result of simple, totally preventable mistakes made by honest taxpayers. The tax code is incredibly complex, right? And operating without a precise strategy is just a fast track to a very expensive lesson. To keep this explainer super actionable, we've organized these 10 costly mistakes into 4 strategic categories: deadlines and estimated payments, hidden income and investments, deductions and credits, and the final filing review.
All right, let's jump right into Section 1, Deadlines and Estimated Payments.
So right here is a huge misconception that catches millions of people off guard every single year. Filing an extension gets you more time to prepare your paperwork, sure, but it absolutely does not delay when your actual payment is due. If you owe taxes and miss that deadline, the IRS immediately starts tacking on failure to file penalties and compounding interest. It's brutal. Always estimate what you owe and pay it on time, even if the final paperwork comes later. And hey, speaking of payment deadlines, if you do freelance work, run a business, or have significant investment income, the IRS actually operates on a pay-as-you-go system. That means you've got to make 4 quarterly estimated tax payments throughout the year. Just waiting until tax season to pay a giant lump sum? Yeah, that can trigger harsh underpayment penalties, even if you end up paying your final balance in full.
Moving right along to Section 2, Hidden Income and Investments.
Whether it's freelance gigs, driving for a rideshare, selling stuff online, or literally just interest sitting in your bank account, it is so easy to forget about side income. But here is the harsh reality check. The IRS already gets W-2s and 1099s for all of this stuff. Their automated matching system is highly sophisticated. If your return misses even one of these sources, their computers are going to flag it instantly. So always wait until every single document is in your hand before you hit file. Now, this one trips up so many people. A lot of investors incorrectly assume taxes only apply when they actually withdraw cash from their brokerage accounts. No way. That is a dangerous myth. Selling stocks, ETFs, or crypto creates a taxable event. Even if you sell at a gain and immediately reinvest that money into a brand new asset without ever transferring it to your checking account, you still owe taxes on that gain. And then there's this. Tapping into your retirement accounts early, it's one of the absolute most expensive traps you can fall into because it hits you with a severe double tax whammy. You aren't just paying regular income tax on that money, you're also getting slammed with a harsh early withdrawal penalty. Always calculate the total mathematical damage before you even think about touching those funds. Okay, let's jump into Section 3, Deductions, Credits, and Records. Listen, a tax deduction is literally only as good as your records. It really is that simple. Whether we're talking about charitable donations, business expenses, or a home office deduction, you need proof. A deduction is completely worthless without the specific records to back it up. If you get audited and you don't have receipts, bank statements, mileage logs, or donation acknowledgments, the IRS will just disallow the deduction and your tax bill is going to skyrocket. You've got to keep everything documented year-round to build your essential audit defense. Now, people are always obsessing over deductions, right? But honestly, they totally overlook the absolute power of tax credits. Here's the difference. Deductions reduce your overall taxable income, which is great, but tax credits slash your final tax bill dollar for dollar. Missing out on the child tax credit, education credits, or energy credits means you are leaving thousands of real dollars permanently on the table. Okay, for all the small business owners and freelancers watching, listen up. This one's for you. Putting your family groceries and your business supplies on the exact same credit card or checking account creates absolute total confusion. If you're ever audited, it becomes incredibly hard to clearly prove which expenses were legitimately for the business. Best practice? Never, ever mix them. Maintain strictly separate business bank accounts and keep those organized records all year long. Finally, we arrive at Section 4, the final filing review.
Please do not let a simple typo delay your refund for months. I know it sounds ridiculously basic, but a name change, a typo in a social security number, or just one transposed digit in your bank routing number will instantly halt your returns processing. Just take 5 minutes to verify the specific personal data. It will save you weeks of frustrating correspondence with the IRS.
So why do these typos even happen? Well, it's because we rush. Everyone just wants to get tax season over with, so we sprint to the finish line. But rushing leads to basic but highly costly errors. We're talking simple math mistakes, literally forgetting to sign the document, clicking the wrong filing status, or leaving out a required supplementary form. These mistakes trigger automatic notices. Always use your tax software's final review feature. It's basically a spell checker for your taxes. And hey, if your situation is deeply complex, take a step back and consult a qualified tax professional. Honestly, the best news I can give you today is that most of these IRS tax mistakes are completely preventable. Avoiding penalties and keeping your tax bill as low as legally possible, it's entirely in your control. Staying organized and just taking a breath to review your work is your absolute best defense. So I want you to ask yourself right now, are you unknowingly leaving money on the table this year? The tax code is constantly shifting, and what you don't know absolutely will cost you. Take these strategies, reevaluate your records, and ask yourself, is your current financial plan built to simply pay taxes, or is it actually built to build wealth? Thanks so much for joining me on this explainer, and we will see you next time.